So my name is Geoff Tomkins. I've been a long-term property investor originally in New Zealand many, many years ago, and been investing in Australia since I hit the Gold Coast uh, 25 years ago. So seen lots of changes in the property market over here and in Queensland and right around Australia. I've never seen in all my years of investing in New Zealand and Australia such a strong property market. So it's great news for those that are in the market or getting into the market. Very good capital growth, very steady. And also rents, of course, are increasing. We've got a shortage of property in Australia, and that demand is going to continue to outstrip supply. So again, if you're sitting on the fence and not sure whether you should be investing or waiting, what we're seeing in the current market with property is it's performing very strongly, and those that are taking the decision to say yes and move forward with property, making very good capital gains. So tonight's presentation is all on these higher cash flow properties. When I started investing, I didn't really have the knowledge or the education. Just bought a property, freestanding house. I was always working on it, spending money on it, maintaining it, tenants in place. Didn't really understand the true cash flow and all the intricacies of property and wealth creation. But over the years, over many, many projects, you learn as you do each project. And then I understood the benefits of brand new and high cash flow properties, and they can really increase your net worth, and obviously a lot less headaches to maintain these properties as well. So what we're seeing now with I was a serial renovator many moons ago. I was in the building trade myself, had an extra coated company in New Zealand, and costs of renovating then in those days were very cost effective. Materials, labour, skilled professionals was quite cost effective, but we're in a very different market now where trades are people are struggling to get trades, cost of materials. So actually renovating properties is becoming much more expensive, and it's a much more of a challenge to actually make a profit on a renovation project now. So having that education and as investors and making the right decisions is really going to help you build your property portfolio. Obviously faster. Okay, so a bit of agenda tonight, what we're going to cover. So we're going to cover what's happening in the greater Brisbane property market. As I mentioned earlier, very, very strong. Some great opportunity right now to make some very good capital growth, over the next few years leading into the Olympics. Next, we're going to cover how to find these off-market properties. As a buyer's agent in Southeast Queensland for well over 10 years now, I source new and existing properties. What we're seeing is a lot of competition for properties, especially in the Greater Brisbane market, which is many parts of Australia. So what we're seeing is once we get that more competition for each property, that's when people start overpaying for these properties, and there's a fight, there's a competition. So what we want to do is try and avoid that. So we're going to show you tonight how we can access these off-market properties. The benefit of that is we can say yes, and we know the price we're going to pay for the property. We know the rental income. We can do the cash flow very, very accurately. And we know based on our funding position or our affordability what our limit is as well. We're going to cover some of the benefits of high cash flow properties. We're going to show you real case studies, and we're going to do a quick cash flow comparison of a standard property versus a high cash flow property. And that's going to really highlight the difference and show you the benefits. As I mentioned, when I started investing, I just bought existing properties and put tenant in place. Now I make a lot smarter decisions in my property investment journey. Stamp duty, we all have to pay stamp duty as a state-based tax, but we're going to show you actually how you can save quite a bit of stamp duty on a property purchase. When I say quite a bit, around that sort of $10,000 to $15,000 minimum on each purchase, which really adds up. We're going to explain as a buyer's agent that specialises in helping investors, how we're going to offer our clients and have helped our clients through our VIP service. We're going to have some real case studies we're going to show you tonight as well. And then we're going to quickly cover the types of properties that are going to give you more capital growth and more cash flow. And the process from there, if you like to find out more, then we invite you to book on a strategy call with myself, and we can have a more discussion. One thing I have learned over the years is property investors, we're all in a very different position, whether it's our cash flow, our purchasing price, our long-term buy and hold versus short-term. All those things will really mean that all of us are in different financial positions when we're making decisions on investment properties. As an investor myself, the good thing is we can have that discussion on what your goals are, your financial goals in terms of property, because at the end of the day, we're buying these investment properties to make money. So and that's going to fund our lifestyle or help our families. travel, whatever our choices are, but it certainly gives you a lot more options in life when you can create your own wealth, and especially going into once we get closer to retirement phase, being able to be self-funded, I think, is a goal of many, many Australians. So, if we're just relying on shares or super, becoming more of a challenge. So a lot of people are actually going back to property to build their long-term net wealth. That's the agenda that we're going to cover off tonight. Interesting facts there. Obviously, we've just had the election over the weekend, and of course, we are all a bit unsure, how that was going to affect the property market. So, Michael Yardney is the largest buyer's agent, I believe, in Australia. Been in the industry many, many moons, well over 30 years, and makes very good common sense decisions and forecasts on the property. These forecasts are based on data and statistics and real live information. So follow his page a lot. He has some really good content about what's happening. And of course, there was government being re-elected into governing for the next 4 years. So that does have an effect. It will have an effect on property prices. So the good thing about you guys spending the time tonight to take in this information, you've got the up-to-date data, and you're not relying on hearsay. You're looking at the real facts. So you can see on the screen there, Michael Yardney is forecasting a very strong property price growth. So we talked at the start of the presentation about supply and demand. It's not interest rates or borrowing capacity, it's the supply and demand that will determine whether property goes up or down in value. So as we all know, as homeowners or investors or getting into the market, there's a lot of competition for property. There's not enough property. I think that really started coming out of COVID with this immigration coming into Australia, very, very strong. And we're building less new properties than we ever have. So we're not keeping up with the current supply. But what is interesting is over the next 5 years, sorry, the government's the forecast here for about another 1.5 million people to come into Australia, which is quite staggering. I remember 2 years ago when the forecast was 400,000 people forecast to come into Australia, and that year I think we had 620,000. So over 200,000 people in 2023 came in than what we actually forecast. So 600,000 population growth in 12 months into Australia is quite staggering. We simply are not building enough homes to accommodate those home buyers and investors and provide that rental accommodation. It's quite scary if you're on that rental ladder at the moment. We're in southeast Queensland, but I think we're experiencing right around Australia a shortage of investment properties. The government's going to allow this strong immigration over the next 5 years, massive immigration numbers. But what they've come out and said, top of that is we actually need about 1.2 million more homes. And then you've read it right here. The government promises to build 1.2 million new homes, which Michael Yardney, as I mentioned, very educated gentleman, runs a very large buyer's agent sourcing property all around Australia, so not just tied to the Greater Brisbane region. He's saying that's unrealistic, and we look back over the last 5 years coming out of COVID, immigration coming in, and still again we weren't building enough new homes, and the government's actually not supplying a fraction of that 1.2 million homes required. So, as investors, it's really our role to help increase the number of investment properties. And with these multiple income properties that we're going to talk about tonight, you're not only giving yourself, a much higher rental income and cash flow, also, helping in some small way towards the rental crisis. So the government's on one hand is saying, we're allowing all these extra people in, but on the other hand, it's saying we're making it actually more difficult for investors, not incentivizing. So if you've got investment properties or are looking to get into the investment market, that only means that the rents, supply and demand will keep continuing to rise in value. So there's a competition for rental properties at the moment, already quite severe, and that will only continue. We recently built a dual occupancy property for an investor that came over from New Zealand, and we forecast the rental on completion at 780 to 840 per week. The property manager achieved $900 a week combined for the two units. from day one. So very strong. So we're seeing this numbers and this data really play out into the rental market. So again, it's up to us as property investors to really help provide part of that supply. So we know that Australia is going to be very strong in terms of population growth. We are going to have our rental crisis is going to continue. So whereabouts in Australia do we invest? So again, supply and demand. And if you can read those numbers on the chart there, I know it's a little bit hard to read, but in Queensland there, we've got 31,000 net interstate migration gain, which is huge. Only followed the only state with interstate migration growth is WA, about 10,000. So we're three times higher than the next closest state. So if anyone lives in Brisbane or the Greater Brisbane region or came up on holiday over the last couple of years, you would see more cars on the road, new schools, hospitals being expanded, huge amount of infrastructure, growth corridors everywhere we go in southeast Queensland because of that population growth. It's a bit of a pain on the downside of driving around and trying to get to work or places of enjoyment. But the benefit is these people need to rent or buy somewhere. So that, again, it's putting pressure on property prices, and that's where you'll get the strong, capital growth. Of course, other couple of regions around Australia that have been performing very well over the last few years, Perth and Adelaide, of course. But of course, Brisbane's the only capital city to have the Olympic Games, which is going to just add on to that shortage of property. Why is it going to add to the shortage? Well, they're going to create a lot of new venues, can upgrade existing stadiums, and they need workers and infrastructure to do this. So that's drawing a lot of people into the Queensland property market, and there's quite a labour shortage. Wages are going up in southeast Queensland, which means rents will increase as well because of this demand. So you can see on the right-hand side of the screen there, this is all the venues where the Olympic Games are being held. So the good thing about, it was announced 2 weeks ago, the good thing about this is all the Games villages aren't just on one part of southeast Queensland. So if anyone that's not familiar with the southeast Queensland corridor, what we call it, it's basically from the Gold Coast in the south up to Logan, Ipswich, up to Brisbane, and then further up north to what we call Moreton Bay, all the way up to the Sunshine Coast. So that's sort of regarded as the southeast Queensland corridor. Venues right the way through. So I think it's a great idea. They're actually spreading out in the regions, so that'll help the transport and accommodation in different areas. But it's also going to give a boost to all these local economies, not just focused in the Brisbane city, for example, extending the line from Moreton Bay right up to the Sunshine Coast over the next few years. So all this infrastructure will drive the growth of the market. Probably a bit hard to read on screen there, but that's where all the venues are being either built brand new or upgraded. So if anyone wants to see a copy of this webinar, the slides, just put in the chat box there. Happy to send out the copy tomorrow. We are recording tonight's presentation as a live webinar. So this my operations manager will edit it, and you're welcome to, we'll send out a copy of the webinar as well, so you don't have to take screenshots of the slides. The main thing to take out of that is there's a huge amount of figures being spent by the government and private enterprise as well to cater for these games and coming up in this next 7 years, which is very, very exciting. And if you look back to the last time Australia hosted an Olympic Games, which was 2000 in Sydney, that drove the property market very, very strongly leading up to the Games. In the next few years after the Games, as all the infrastructure, people moved there for the work of the venues and accommodation, and they stayed on in Sydney. So that was a very big driver of that economy. Hence why Queensland, southeast Queensland, are expected to see that very good capital growth continue over the next few years. The chart there on what's happening, the latest data on CoreLogic in the property market around southeast Queensland, and very strong growth there in Brisbane, Adelaide, and Perth. And you can see the median house price in Brisbane is now the second most expensive city in Australia, which was quite hard to believe up until a few years ago. So that's just those are real figures, CoreLogic data, which is what properties are not listed for but actually selling for. So the the median house selling price now in the Brisbane region is now up to 907,000, and a lot of suburbs. I'm based on the Gold Coast myself. Most suburbs on the Gold Coast are well over $1 million median price, house price. So Brisbane is really that hot spot, and the continued growth is going to be very strong over the next few years, leading up to the Olympic Games. So we know that Brisbane, is really the hotspot. That's where we're going to make very strong capital growth, very steady capital growth. The last 3 years been averaging about sort of 9 to 12% per year, which is pretty much double the long-term average. Again, figures and numbers, supply and demand all point towards that strong growth, continuing. So I think the biggest challenge once we buy an investment property is really the cash flow, holding on to that property. As I mentioned at the start of the presentation, properties don't always go up in value. Some two-thirds of the cycle, in fact, are stagnant, drop a bit, then they go again, based on the property clock. So the benefit of these cash flow properties is several. So these are properties where there's more than one income stream. On average, they're going to give us as investors about 30% more rental income. We must build them in areas where there's high tenant demand. As we know, for these types of properties where there's single residence dwellings and a lot of people are single people now, the demographic, I'm sure everyone's aware, has really changed, over the last few years. So, the old numbers were based about mum and dad and 2.5 children. That was the average household. There's a lot more single people now around living in Australia. So this demand for the smaller density housing is really important. And these are still people with good jobs, good incomes, but certainly up against couples or families when they're renting a property, they're unfortunately missing out. So as investors, that gives us a higher rental income. And again, it helps, in some small way, provide a bit more accommodation to help our rental crisis. Tax benefits. So we talked about the stamp duty early on, very good savings and stamp duty. And tax benefits. With a brand new property, we can claim all the depreciation. So in the first few years of holding an investment property, really the toughest. And if it's highly negatively geared, that can really affect our cash flow, our personal cash flow. And if we can't manage that, it means we have to sell the property. So the idea is to hold the property for the long term. I'm sure we've all owned properties and sold them and then looked back and thought, wow, I wish we'd hold on to that property. It may not have gone up in value the last 1, 2 or 5 years, but of the long-term growth over the next 10, 15, 20 years, going back in time, that's produced, very strong long-term capital growth. So if we can afford to hold it in the times where the property isn't growing, we're going to achieve the best financial outcome from these properties. And consistent income. So if we've got more than one tenant in a property, we're much less likely to have a vacancy rate as well. And now we talk about the capital growth upside as well. So now we've got a property. When we do sell our portfolio down for retirement, we could sell it back to another investor for the higher rental income, or we could send it back to a family that are looking to generate extra income as well. So on the right-hand side of your screen there, on the top there, that's what's called as co-living. I am going to go through the floor plan in a bit more detail, but essentially we've got three lots of rental income coming from that property, about 30% more net rental income. The property on the bottom, that's what's called a dual occupancy, 2 separate units side by side, again, producing around about 30% more rental income. Okay, so we talked at the start of the presentation, a lot of competition for properties in Australia. If we're finding a property on realestate.com or domain.com, we're up against multiple buyers on this property, a lot of competition. And that's proven by the median list price for a property on realestate.com versus the median selling price. So what's happening now in Queensland, southeast Queensland, is properties are selling higher than the median list price. Again, back in previous real estate cycles, there was a listing price and the selling price was actually below the listing price. What we're seeing now is, in fact, the opposite. So the selling price is actually higher than the list price. So, example, you see a property online for 800,000. The chances are it's actually going to go much higher than that. So, again, you're fighting with a lot of other buyers and home buyers and investors out there. It means you're going to have to play over the market for that property to secure it. Which we will obviously want to try and avoid. As investors, we need to make a decision. We need to know what we're going to pay for the property and what the cash flow is going to be of that property. And the data and statistics around that's going to lead to, that long-term capital growth. So a bit of an explanation there of what we call co-living. So if everyone can see that floor plan there, again, we'll be recording tonight's presentation. So we'll be sending it out tomorrow. But essentially, if you look on the left-hand side, essentially it's like a 3 or 4 bedroom traditional house with a few minor modifications to really maximise our rental income. So what are the benefits or what are the differences? So we make the bedrooms a bit bigger. So look at bedroom 1 here, larger bedroom. More importantly, we put it up its own bathroom, own ensuite. So each bedroom, each of the 3 separate tenants have their own bathroom, bigger bedrooms, higher ceilings, lockable door on each bedroom. So each tenant has got their own privacy. So it's very different to the old house share situation. So bedroom 1, an ensuite. Uh, bedroom 3 there, it's got its own bathroom ensuite, and bedroom 2 there, again, it's got its own ensuite. You can see we've got a media room here. What's that for? Well, you'll notice with the media room, we've got a built-in wardrobe and external window. So that means that we can technically sell that as a 4-bedroom home. So while we own it as an investor, we get that 30% more rental income. We come to sell it, and we could either sell it back to another investor for that higher income or back into a home buyer, because essentially it's a 3, 4 bedroom traditional house with a few modification. So you're really getting the best of both worlds, the capital growth and also that higher cash flow. This is what's called a fixed price turnkey property. So new to be built generally. Sometimes we do have these built new, ready to go, but generally it'll be to be built, which allows us to save on stamp duty, allows us to claim more tax deductions, etc. The key to co-living is the property management. Really, a property manager that understands it. So here in Southeast Queensland, we've got quite a large builder developer known as Gallery Homes. They build these co-livings, but more importantly, they've got their own property management arm that have been managing these co-living properties for the last few years now. And they came up with this product design a number of years ago based on all the surveys, the data, the market research. And I spoke to one of the gallery property managers the other day, in fact, and they had a 0 vacancy rate, which was quite incredible. So again, we're helping the rental crisis, we're giving ourselves more rental income, and we've got a great product there, new, low maintenance, maximising all the cash flow and also the tax benefits as well. So there are some limits to where we can build these co-living. So of course we need to build them near infrastructure, public transport corridors and employment corridors as well. What are the sort of numbers around these? Well, as I mentioned, just as a general rule of thumb in the Southeast Queensland property market, these per room, this house would, in this area, would probably rent for about $700 per week, but these rooms start at $300 per room. So we just rented one recently for $960 a week, which is significantly above what it would rent for as a standard home for minimal extra purchase costs. Another type of high cash flow property is called dual key or dual income properties, depending on which state you're from. And if you see the floor plan on the left-hand side, again, looking from the road frontage, they look like just like a traditional house. That's the design, that's the appeal. You know, they don't stand out on the street. But the difference is under the floor plan, very big difference. It's under one title. So the good thing is you only have one set of outgoings and rates. But when you look at the internal floor plan there, there's 2 separate residences. So down the middle here, we have a double gyprock wall. So it's a fireproof wall, goes right up to the ceiling. So it's soundproof as well. So on one side, we'll have a larger dwelling. So typically it could be a 3 or 4 bedroom residence. So in this case, it's a 3-bedroom residence with an ensuite, walk-in wardrobe. So master with a second bathroom there on the right-hand side. And then on the left-hand side, we could have a 1 or 2 bedroom residence. So it's sort of like a house with a granny flat, auxiliary dwelling. So I know a lot of people, especially in Sydney, are adding granny flats to their properties. It is becoming more expensive to do that. The good thing, this is purpose-built, so it's much more cost-effective, but still gives us that 2 rental incomes. Do these work well? Yes, I've built a couple myself in my own portfolio over the years. So big believer in these high cash flow properties myself. So again, separate entrances. What we do for, I know we have a lot of questions about who pays for the power, the water. So in terms of the dual income properties, we have 2 separate water meters. So we charge the tenants for water usage individually and 2 separate power meters as well. But again, one title, so we only have one set of outgoings. One set of insurance as well, so building insurance and landlord's insurance. So we can live on one side, we can rent the other. So a lot of homeowners are looking at this type of property now because, as everyone's struggling to pay the mortgage and income is at a cost of living has really increased far stronger than our wages, traditional wages have gone up. So the benefit of these, you could potentially rent one side out and live in the other as well. Or if you've got an elderly parents, they could live on one side, independent living. If you've got adult children that are going into the workforce and can't get into the rental ladder, again, they could potentially rent one side. So there's a lot of positives to these high cash flow properties. So those properties provide about 30% more rental income. If your decision is really about cash flow and the stronger the yield, the better, this is another product that's even higher in terms of yield. So the Brisbane property market, most properties will give you around about a 4% yield. These rooming properties will giving you around about 9% yield. So over double the rental income that you'd achieve from a traditional house. So again, I hope you can read the floor plan there on the right-hand side. So this, again, from the front looks like a fairly standard home, but very big differences inside. So this is two-level, this design. And downstairs we have um, the rooming there. So we have two rooms downstairs. So these are fully self-contained. So you go into each door, they have their own bathroom, own bedroom, own living area, and a little kitchenette there as well to cook your food. So they're completely pretty much self-contained. Okay, we put digital locks on each door. So the tenants have got their own privacy. So more like a one-bedroom unit. But the good thing is now we've got 5 rental incomes. So two downstairs, 3 upstairs. So we've really maximised our rental income. What are these renting for? These are renting for about 400 to 450 per room. So that's well over 2,000 per week income. So very, very strong net income. Again, they need to be built, of course, close to infrastructure and transport corridors. But if you're looking for property and your decision is based more on cash flow, these are perfect opportunity. Of course, they're in the Brisbane, closer into the city, so they're going to achieve very strong capital growth because the land value is increasing, on a daily basis. Again, property management is really the key to rooming. The benefit of coming through ourselves as a buyer's agent that specialises in these high cash flow properties, we can recommend a property manager that really understands how these work. Okay, we talked at the start of the presentation about cash flow. When I bought my first investment property many years ago in New Zealand, I used to jot down the numbers, have a rough idea, because it's very, very important to understand how much is this property going to pay me or cost me per week. If it's costing me, can I afford to keep that over the long term? So you can see there on the left-hand side of the screen. So this is just a basic cash flow comparison, comparing a standard home versus a high cash flow property. So on the left here, we've got a property worth about 900,000. So just please remember that tonight's presentations, we're just using some generic numbers and figures just to give you an idea about the comparison of a standard home on the left versus a high cash flow property on the right. So property on the left, $900,000 house. It's about the medium house price in Brisbane now. We're looking at a 80% loan, about 720, so that's 6.2% interest rate. That's giving us about 45,000 per year in gross rental income. About 10,000 a year in property expenses, so property expenses, rates, insurance, property management costs, repairs, maintenance, etc. So about 55,000 a year out-of-pocket expenses, and then we look at the rental income. So that property would rent for about 750 per week, 37,500 per year. Tax savings on an older property, we get minimal tax savings. About 5,000 were factored in. So total income is about 42,500. So therefore, we've got a shortfall of about 12,500 per year, which is quite significant. That's $250 roughly, per week out of pocket, compared to property on the right. This is one of these high cash flow, dual occupancies or co-living type properties. We've just used a round generic figure there of $1 million. Loan, 80% loan there, 50,000 mortgage payments per year. Property expenses of about 9,000 because we don't have to rely on as much cost for maintenance. So brand new or very new, low maintenance type property. So we've got outgoings there of about 59,000. On the income, this could be a two or three income property. So again, we're maximising that rental income, so you can see a much stronger gross rental income compared to the standard house. And then we've also got increased tax savings. How can we get these increased tax savings? Well, based on the ATO's taxation laws, we can only claim depreciation on the fixtures and fittings of a property if we're the first owner of a brand new property. So it really limits our tax benefits on an older property. The tax benefits aren't the reason you should buy a property, but they certainly help the cash flow, especially in the first 5 years of owning an investment property, which I think from personal experience is the toughest. Once you go past that, then the rents are increasing. You've seen the capital growth. It's pretty much plain sailing. You should be looking to hold on to that property and leverage, the equity of that property. So when you look at the net figures there, now this property, we've got an incomings of about 61,000. So we've got a cash flow positive situation of about 2,000 per year. So pretty much covering itself versus a negative gearing of 12,500. And of course, if you look at the property holding it for the next 10 years, property on the left, a standard house, that's about $125,000 over 10 years out of pocket, versus about 20,000 in positive cash flow. So that's a big significant difference, and that helps us when we go to build our property portfolio, because now the banks, when we come to refinance this property, pull the equity out, we can refinance for the next property if our goal is to build a property portfolio. That's going to help our servicing and capabilities. So the bank's going to love, or the broker's going to love that high cash flow property, and it gives going to increase your borrowing capacity. As we know with the banks in Australia, it's very tough to borrow money. They factor in that 2 or 3% buffer rate above the current interest rate, which has really reduced our servicing requirements. So this extra income really helps that. And it means, of course, we're not pulling money out of our pocket each week to top up the property, which can be very, very frustrating. And also because it's a newish type property, it means we don't have to get tradies around and upgrading the hot water systems, electrical, plumbing, etc. It's pretty much set and forget for the first, 5 to sort of 10 years of ownership.
So $750,000 has grown to 885 estimated. So as I mentioned.
So I'll start the video. So this is a client that we helped with one of these brand new properties some time ago. So we did a Sydney-based investor. So we helped a lot of our investors all around Australia. So I'll just quickly play the video, but you can see on the left-hand side of the screen the figures.
So $750,000 has grown to 885 estimated. So as I mentioned, a very, very good growth in 6 months. Just about 6 months, not even 6 months, in fact. Yeah.
Exactly. Fantastic result. And interesting story for everyone watching today. We did this video just over a week ago, and unfortunately it didn't record, so we've just redone it. Can you remember what the valuation was just over a week ago, Amit?
I think a week ago, maybe close to 870, was it? 865, 870? Yeah.
Correct.
So it's grown another $10,000, $15,000 in a week. Yeah.
Yeah, so amazing growth in such a short time, and just good evidence of relying on the process. And you've got great equity growth, rental income from early on up to completion. So a real success story. So I really do appreciate your feedback, Amit, and any words of wisdom for other investors looking to invest interstate.
Definitely. So yes, it is a growing area, and there are very quite significant a variety of properties available, so to suit everybody's need. So one should definitely do a good study. Definitely talk with Geoff. He has a good knowledge of the area. He has tie-up with various builders, and that really helps in the whole process. And I have already recommended Geoff to a couple of my friends. They are already in touch with Geoff, and I'm sure they are going to be quite happy in 6 months to a year's time down the line. Yes.
Well, thank you very much. I really appreciate it. Very kind words. I really appreciate your feedback, and look forward to helping you build in future your investment portfolio. So that's a really good case study, recent example of believing and trusting in the process in the Greater Brisbane region. Purchase price for a MIT was 750,000, and under 12 months it was valued at 885. So you think that 135,000 is massive growth, whether it's in 6 months, 12 months, or 2 years' time. That's a huge growth. And just remember, that's a deposit on the next property. So within 2 years, Amit could be, going again for his next investment property and making that strong capital growth. So you've got to think, by investing now or waiting, this is the sort of growth we're achieving in Southeast Queensland on a regular basis for our clients. So that's the core logic valuation you can see on the screen there. So just wanted to show that that's the core logic valuation, and purchase price was 750. So great result, and we love helping our clients build wealth and helping them find great properties. So we mentioned, touched on the stamp duty savings for anyone new looking at property investment. You pay a high rate of stamp duty as an investor. That's okay over the long term. The property will grow far greater than the stamp duty savings. But initially, every dollar really counts to get to that deposit, get that serviceability, to get into the property market. Every dollar we can save is really, really critical in those early years. Now, the benefit of one of these new properties is we save significantly on the stamp duty. Why is that? Because if it's a two-part contract, so example will be a land contract and a build contract, we only pay the stamp duty on the land component. So case study on the left-hand side of your screen there, standard house worth around about 900,000 in Queensland, the stamp duty would be around about 37,000, versus a high cash flow property about $1 million, or so about 500,000 for the land, 500,000 for the build. So 20,000 in stamp duty. So saving $17,000 straight up from day one. That's huge, so there's so many benefits to these types of properties. So here's another case study. We built a high cash flow property for these clients, Melbourne investors, lovely couple, Marley and Daryl. So it was their first investment into the space. I weren't sure. Had a lot of nervous conversations and questions about how it all worked, but it actually worked out really, really well. So they didn't see the property, made the decision based on the numbers, the facts. The banks valued the property, valued the rental income, but their outcome, their achievement was, very, very strong. So I'm just going to see if I can play this photo, because this is real people, real investors that we're helping. So any tips for first-time investors that are sitting on the fence and not sure whether they should buy or build or wait?
Just jump in, I reckon.
Yeah.
Especially if you've got someone like you helping you. So
Yeah, everyone sits on the fence. Once you take that step, especially with someone like yourself helping along the way.
Daryl and I said numerous times actually along that whole period from when we began to when we actually saw the finished product, how grateful we were to always have someone there to ask questions of. And I think that's really where your company came in. That made the difference. And I think that helped us a lot, because if we had done it on our own, I think we would have been a lot more stressed. And we didn't feel like that hardly ever.
It's a great case study there. Again, the big benefit with that is from day one, the property manager entered the two dual occupancy out for $150 a week, more than we forecast at the time they signed the contracts. So it took a bit to get the property built, but once it was built, the income for over the next however long they hold that property is massive. So as well as the capital growth, the upside was $150,000 again in a very short time. That annual income changed that property's yield and return very, very strongly, and we couldn't have achieved that with a standard home. So new purpose-built high cash flow properties, again, you can be based anywhere in Australia or overseas. We help international investors as well, especially from New Zealand now, coming over and looking at this Queensland property market. Again, if you're in a position to invest in real estate, and you're looking to make money, these are the sort of properties that are going to, make you wealth. And you've got to think, how could I save that extra, 150,000 over the next year, 2 year, 3 years, on the average income and cost of living? It's very, very challenging. But this property, clients can still go to work and earn their incomes, and peace of mind. Tenants come in and start paying that property down for them. So as well. So as you can see there, very proud of these clients' results. We get these on a regular basis. You can go to our YouTube channel and check out all the testimonials. But we work very hard to get our clients satisfied. So sure, you can go on realestate.com or Domain and buy a property. You won't find these purpose high cash flow properties, and then you'll have to understand, does the builder A lot of builders don't understand how to build these properties. You're really just a client dealing with the builder one-on-one and a number. The benefit of myself is, obviously I look after the whole project right through from the time we first start talking about your requirements, your cash flow, where we should be investing, the type of property we should be investing in, how to secure the property, give you the options, right through construction, right through to handover to the property manager. So, it's a VIP service. As you can see on the screen there, the sort of process is fairly straightforward. Seen a couple of clients' results there, really speak for themselves. So it's a very easy process. Property investing can be very stressful. There's a lot of moving parts involved in solicitors, finance, property managers, buyers, specialists, selling agents, etc. So if you want a smooth process, that's why we're seeing a lot more buyers agents coming into the property market. It used to be a big thing in Sydney. Now we're seeing buyers agents right around Australia because there's so much competition for property. To benefit myself as I'm an investor, so I look after a lot with investors and really focus on the data and really the numbers around that as well. So you heard, Molly say and Daryl, just jump in, take action, because you won't make money thinking about it, talking about it. You'll only make money once you actually start to make that decision and say yes. Recent article earlier this year was really shocking. Who knows whether it's going to be factual or not, but the fact is some people are forecasting, some industry experts are forecasting Brisbane house prices will one day be projected to be above Sydney. We're actually seeing that on the Gold Coast now, with multi-million-dollar property sales are happening every day of the week. Obviously, this interstate migration, but now we're getting people from all over the world and wealthy people. So what a lot of people don't understand is the immigration coming into Australia. It's actually quite tough to get into Australia. So we're bringing in educated, financially secure people from other parts of the world. So they're wealthy people that have got assets or skill sets. A lot of doctors, nurses coming into Australia, police officers. Currently helping three police officers from New Zealand and getting into the property market here. The Queensland Police actively, aggressively poaching New Zealand police officers. Same with teachers, nurses, doctors, etc. So all these people are coming in here, higher wages, incentives to move here, and these people need to buy or live or rent somewhere. So again, this supply and demand is only going to get tougher. So it's only going to keep pushing up the property prices here. Now we have a lot of questions about, that's great. What sort of numbers are we talking? So the properties on the screen are just to give you a bit of an indication tonight what sort of we could expect to pay for a property on average, these new purpose-built properties. So on the left-hand side of the screen there, that's a $750,000 property for rent for about $650 per week. Brand new, stamp duty savings, tax incentives, etc. In the middle there, Merredin Estate, Blackstone. So that's one of those co-living properties where we're increasing the rental income, 3 separate tenants in place for that property there, around about 900,000, and that will rent for about 990 per week. So again, significantly above what a standard house would be. And on the right-hand side of your screen, Willow Estate, that's a property that we've sold, but it's just again to give you a bit of a ballpark figure on the dual occupancies. As I mentioned earlier, I built a couple myself, great for cash flow and capital growth. They range depending in the Greater Brisbane region, that sort of $1 million mark on average. If your price point's below that, yes, we can source regional areas, but further out of Brisbane for under that, sort of 800 to 900K mark as well. So again, just to give you a bit of an indication, $1 million purchase price, but the rent's, $1,100 per week, so significantly higher as well. So you'd see why these, the smart investors really love these types of properties. Okay, so we're just going to open up the floor now for any questions. Hope everyone's enjoyed the presentation tonight and got a good understanding of the Brisbane market and opened your eyes up to these high cash flow properties and the benefits and understanding the numbers and the data that I really focus on as a buyer's agent, especially if it's an investment purchase. So we put a lot of time and effort, do a lot of research on these areas and properties, hence why we're getting such good results for our clients, which is very heartwarming when you hear these testimonials. So any questions, please chat them please put them in the chat box. I know it's getting on now late, but I do appreciate everyone that you've taken the time out of your evening to spend with us live, and hope we've repaid the favour by giving you some content and data, and you're excited about entering or building your property portfolio. Some really exciting times coming up in the Greater Brisbane region. But again, the only way you'll take advantage of that is saying yes to a property. So what we're going to do is book a strategy call there. So we're going to have open up the floor for questions there, and you can type any questions in the chat box. I'll be watching that. Lisa, my operations manager, is managing it as well. So if I miss anything, Lisa could just pop that up. And also we'll be putting our strategy call link up in the page as well. So if you'd like to book a call, a one-on-one call with myself, you're welcome to several ways. You're welcome to call us direct. My number is 0404 852 781. And the email will be in the link, and we'll send that through tomorrow when you'll receive a copy of the webinar as well. I'm just going to check the chat box there. Thanks, Lisa. Thanks, Helen. Okay, so Lisa's put the link to the strategy course. If you'd like to book a time in my calendar, just click on the link there. We'll just leave the webinar running for a little bit longer now, and you can book a one-on-one call if you want to call me direct. My number is there, so it's in the chat box. So we have a lot of frequently asked questions, so I'm just going to cover those off tonight, because I'm sure a lot of the audience will be keen to know these answers. Can we help with finance? So getting finance for a property, whether it's your home to live in or your investment property, as we all know, the banks are a nightmare to deal with. Very, very complicated. All my property purchases over the last 30 years in New Zealand and Australia, I've been using finance specialists. There's several benefits. So anyone that's gone to the bank direct, they have one policy. If you fit in their guidelines, that's great. If you don't, they make it very, very difficult. The benefit of a finance specialist or a mortgage broker is they have access to a lot more products, a lot more lenders. And because we're all individual as borrowers, it's a case-by-case basis. So they make recommendations based on our personal purchasing decision. Some banks will give you increased borrowing capacity, better interest rates, better interest-only terms. There's a better offset accounts. There's a number of things. It's not just the interest rate. The difference in interest rate is minor when you look at the capital growth over the long term of the property. But if your bank says no and you can't purchase, you can miss out on that, capital growth that our clients are achieving. So if you need help with a good finance specialist that understands investment properties, yes, again, put it in the chat box, or send us an email tomorrow, or send me a text. I'm happy to introduce you to a good finance specialist. Everything's done online now, it's over Zoom, and it's very easy to upload all your documents. They can assess you. So before we go into the bank and ask for a bank approval, we want to know an assessment based on some our figures, what we can potentially borrow maximum. So before we talk about property areas, bank loans, we need to have our borrowing capacity assessed. So if you don't know that, I'd recommend we get a finance specialist. Very easy. They're not applying for any finance. They're just simply running your numbers, finding out what the banks will potentially lend you as a starting point, and then we can have those conversations around property. What's the next step? So, of course, booking a call, calling me direct to find out what your options are. No obligation. There's no cost to that next step. And then we can explain how it all works in more detail. Of course, we've only, got a limited time tonight. I don't want to be hanging around on the Zoom call all night. So I hope, again, we were fairly direct with the information and the points, that the really relevant stuff. But again, as a case-by-case basis, those cash flows that I showed you, they were, some generic figures. But again, it'll vary depending on your purchase price, your interest rate, your deposit, the rental income, etc. For my clients, I give you a very, very detailed cash flow analysis. It's about a 6-page report. So have we allowed for rates, property inspections, property managers' costs? Yes, we've allowed for all that. Even works out the tax savings based on your, taxable income as well. Do we have a list of properties? We're often asked, can we send a stock list? Unfortunately, we are a buyer's agent, so we don't hold properties generally, and the property market is changing. So even if we've got a property that we know is available today, we come back in a week's time, it's changed, it's sold, and the price has moved on for the next property. So it's a very changing market at the moment because there's so much demand. There's multiple offers on a lot of properties I mentioned earlier, so it's quite a lot of competition. But the best thing is to have a bit of a discussion about these properties in more detail, make sure you're comfortable with these properties, and then find out what that finance number is, and then we can actually look at specific properties. But yes, I do have access to properties all around Australia, so I'm not limited to Southeast Queensland. I believe that's where you're going to get the best capital growth and the most secure property rental incomes. But if our borrowing capacity is under that, or we have a specific area we'd like to focus on, yes, happy to discuss sourcing you those properties in other areas through all my contacts over the years. How much deposit? So if you're new to property investment, the banks will lend you generally up to about 80 to 90%. So it means we really only need, on a lot of these properties, a minimum 10% deposit. And quite often we can use that deposit from equity in a current property. So how do we build property portfolios? We generally do what these clients I've shown you tonight do. They build the property, invest in real estate, wait till the property's gone up in value, wait till the rental income's increased. Your finance specialist will go back to the bank, revalue the property, just like we did in a MITS case, and suddenly you've got 135,000 in equity that you can pull out for the deposit for the next property. So you don't have to save over the next 10 years for that cash deposit, because by then the property's probably doubled in value. We can actually pull that equity out. So it's a much faster and smarter way of building your property portfolio. We're seeing a lot more people look at property within their supers. So can we buy a property in our super? Yes, we have a finance specialist and we have a financial planner. Done some webinars. So again, if you go to my YouTube channel or want to see a webinar that explains how these self-managed super funds work and how you can have a property in your self-managed super. It works, it's guided by the same regulations as your industry supers. It's not for everyone, but you would have an initial discussion with a financial planner. So someone that's experienced in setting up self-managed super funds. So essentially you roll your supers over into a self-managed super fund, you have trust accounts and a separate buying entity, and all the income goes in, all the expenses go out. Very brief, generic explanation, but I would recommend that if you're looking at property in your self-managed super fund. Thanks, Lisa. So Lisa popped the link up there. So just grab these links and open them in different tabs, because then when we're in the webinar, you'll have those links. So I'll just recommend that you watch that webinar. Simon's very, very good at explaining from a financial planning point of view how it all works and what to look out for. It is imperative that you set it up correctly. There's big fines. Super funds are audited every year, just like your industry fund. So the government's heavily monitored it, which is a good thing. But a lot of people like the fact that they can take their super, invest in bricks and mortar. They're not relying on the share market. So if your preference is property for your super, watch the webinar, reach out to us. Can we help build a property portfolio? Absolutely. We have multiple clients now that are coming back for the second or third properties. We help clients as well with doing subdivisions and development. So tonight's presentation was a very easy way to get started to build your property portfolio, set and forget, pretty much. Very low maintenance to maintain these properties, but if you're looking to do property development, subdivision, I've had a lot of experience in that area helping clients, and it's a great way of building your property portfolio. So whether it's buying the first property, waiting for the equity growth, if you're looking to manufacture equity another way, just happy to have that conversation, how we could source those properties as well. I would say, just on that, if you're looking for subdivision and development, there's huge costs involved. You quite often can't borrow the cost to do subdivision development, so it's really for those investors that have access to cash or a lot of funds to fund that. A lot more time involved. There's a lot more work involved, but for those investors that have got a lot of experience and look at that space, yes, we can have a conversation around that. Okay, so that seems to have pretty much wrapped up tonight's presentation. So again, I applaud you for taking the time out of your Tuesday evening to watch this. And again, I hope we've given you some great value and content to enjoy and learn about the market, and more specifically, Southeast Queensland and the exciting opportunities here. So just before I end the webinar, there's a QR code there, so welcome to take a photo, and that'll just take you through to my strategy, my calendar, and you're more than welcome to book a one-on-one call. Again, no obligation, no cost. Have a discussion, and then if you'd like to explore more, we help a lot of investors all around Australia, as I mentioned. So with the technology now, we do these Zoom calls. So if you're not familiar with the Greater Brisbane region, but you'd like to know more, again, we can book on a one-on-one phone conversation, and then from there we book in a Zoom where I can go to Google Maps, I can show you areas, the infrastructure, types of properties, walk through videos, all the data and information you need to make, good, educated decisions. Okay, well, thank you, everyone. Thanks for the kind words and the feedback. Much appreciated. Again, really enjoyed this presentation. I know some of you are speaking to you about property at the moment, so thanks for attending tonight. We will, as I mentioned, we will record tonight's presentation, so at least we'll edit it and send it out to you tomorrow. So if there's any other questions, please type them in the chat box before we end the webinar. Thanks, Lana. Thanks for your feedback. Thanks, John. Simone. Yep, appreciate that. I'm glad you've got some good value and content out of the presentation. Really exciting times in the the Greater Brisbane market, and it'll really reward those people that say yes and make decisions moving forward. I'm going to end the webinar. Thank you again for attending tonight, and have a great evening. Thank you, Helen. Really appreciate the feedback.